The stock market is a machine of pure leverage. If you know what you're doing, it can multiply your capital and build serious wealth. But if you walk in unprepared, that exact same leverage will strip your accounts bare and bankrupt you. If you are watching this to turn 10,000 rupees into a crore by next Tuesday, close the video. Consistently doubling your money overnight is a statistical myth. Treat this like a casino, and the market will gladly take your chips. We are going to build a completely risk-free foundation. By the end of this tutorial, you will set up a professional trading environment and execute your first live market trade without putting a single rupee of your own savings on the line. Before we even look at a chart, you need a steady, active income. You must keep your day job. Trading income is erratic. You might make $50,000 one month and lose 10 the next. If you rely on trading to pay your rent, desperation sets in. Panic leads to emotional decisions, and emotional decisions wipe out accounts. Your day job is your psychological armor. To trade effectively, you have to understand what you are actually buying. Take a company valued at 1 lakh rupees. Instead of selling the whole company to one person, that total valuation is divided into equal, affordable units. Think of a 12 rupee chocolate bar made of 6 squares. If you snap it apart, each individual square is worth exactly 2 rupees. That individual piece is exactly what a share is. It is a single, standardized fraction of a company's total value. When a company needs capital to expand or run marketing campaigns, they offer these fractions to the public. You pay for that unit, and in return, you hold legal, fractional ownership of that larger corporation. Recognizing that a share is a measurable unit of a company's total worth allows you to evaluate whether the current price is fair. This perspective shifts your focus from famous brand names to the underlying business valuation, providing the mathematical foundation needed to move past guesswork. To hold these digital fractions, you need a specific digital vault called a demat account. You secure this vault through a registered broker, like Zerodha, Upstocks, or Angel One. The process is standard paperwork. You select a broker, verify your email, submit PAN and Agar details for legal compliance. From warning, once your account is approved, stop. Do not deposit any real money. The demat account is just the plumbing. We have the infrastructure in place, but executing untested ideas with actual savings guarantees a loss. The testing phase has to happen in a protected, isolated environment. That protected environment is TradingView. We are going to use a feature called paper trading, a built-in simulator that mirrors live market conditions but funds your account with digital fake money. Head to the search bar at the top and type in a major stable stock, like HDFC or Reliance, to load your first live market data. Look at this chart comparison on screen. By default, the system shows a basic line. That line gives you almost zero actionable data. Click the display menu and switch your view to the red and green blocks, called candlesticks. This format shows you the exact opening and closing prices within specific timeframes. Now, look at the very bottom of the screen. Click the tab labeled Trading Panel, select Paper Trading, and hit Connect. Your simulator is now live and funded with 100,000 test dollars. By removing real financial risk, you strip away the fear and greed that cloud judgment. You now have a clinical, objective lab to test whether your theories about market movement actually work. To initiate a transaction, direct your attention to the order panel on the right side of your screen. Make sure the Market tab is selected, which tells the system to execute immediately at the current price. Then hit the blue Buy button. Click Buy, and a static blue horizontal line marks your exact entry price. As the jagged live price rises above it, the tracker turns green for profit. But if the price drops below this baseline, the counter instantly flips red, visualizing how fast capital bleeds. Keep in mind, TradingView displays this practice account in US dollars by default. You will need to multiply those numbers mentally to track your performance in rupees. Watching this simulated line drop into the red serves as a lie detector for your strategy. It forces you to confront flaws in your market logic long before a single real paycheck is ever endangered. You have successfully set up a completely renewable, zero-risk ecosystem. You can wipe out this practice account 50 times over, hit refresh, and start again. But clicking the Buy button randomly inside a simulator is still just guessing. To extract consistent profits, you need to understand why the price moves.
This chart outlines your strict learning roadmap. First, master reading candlesticks to understand immediate momentum, then move up to chart patterns for broader trends. Only after proving consistency do you graduate to intraday or options trading. Eventually, when you do transition to your real demat account, treat your first 10 to 50,000 rupees as an expense. You will likely lose it. Consider it a mandatory tuition fee paid directly to the market in exchange for practical, hard-won experience. The traders who survive are not making blind, overnight gambles. They treat trading as a discipline. They accumulate data in the simulator, strictly manage their emotions, and patiently wait until the math is in their favor, all while keeping their real-world livelihoods